everyone! This video is about financial aid that you might need if you get accepted to the health professional programs. As I mentioned before, this channel is made in order to help you to save money. So I really hope that this video will help you, maybe, I don't know, I really hope to understand better the whole process and maybe even get the better interest for your loan. At least if it helps you to understand the process, I'll be very happy. And small disclaimer, I am not a financial aid advisor. I have nothing to do with that. All information in this video will be my personal research or personal understanding of the process, and if you need some real financial aid advice, please contact only your school where you got accepted and contact their financial aid office. This is the only and the best place to get some real advices about your financial aid situation. However, I still hope that my video will be helpful to you. So there are two ways of financial aid that is available in the United States. It is government loans or government financial aid is called FAFSA, and the second one are private loans. So if you have a green card or if you're a US citizen, obviously your best choice would go with FAFSA. But for those who don't have this option, you might consider some private loan companies. I also have heard that you might get some financial aid from your own country, but I don't know anything about that. So I'm going to talk about options in the United States. In the United States, if you're not US citizen and don't have a green card, you will need a cosigner for your private loan. Cosigner is a person who will co-sign for you for your loan and will take equal responsibility. If you will not repay this loan, they will put it on your cosigner. So it's kind of stressful and responsible to be a cosigner, and it is based on the trust, right? Usually I categorize financial aid options like private loans on two categories. It's my personal classification, I'd say. So the first category would be loans that are based, like when they make a decision, they are making the decision mainly on the credit score of you or your cosigner. That's how they are based with their decision. They take into consideration other factors, but they're not significant. So first category, it's only about the credit score of you or your cosigner. And the examples of such loans are Discover or Sallie Mae loan, and there are many more. I'm only telling two examples, and there are like, I don't know, it's probably 10 of them or more, but it's like plenty. And the second category would be the loan companies that when they make a decision what interest to offer you, they take into consideration, besides the credit score is very important. Besides that, they also look at the salary. So salary of the cosigner, or maybe you have your own salary, that's what they are looking for. And they make the decision based on this. These two factors are significant for them, and obviously the other like small factors put a little bit input as well. So the examples of such loans would be Earnest and College Aid loan. So the next is I'm gonna talk a little bit what to look in your cosigner. So when you're looking for a cosigner, I know it's easy to say, but it's very hard to find. I know you guys have been there. The cosigner, I would recommend you to find a cosigner that has a good credit score, because this is important for both types of loan. So my recommendations are like the cosigner credit score to be at least 700, and the higher the better. Second, if you are considering this second type of loans too, the salary of the cosigner, then it's not just about credit score, it's about the salary as well. And it might be good, because sometimes the credit score might be lower, but the person has a good salary, so it kind of covers for that, and they still give you the good interest. For the salary recommendations, they're very blurry. What I found was that it has to be at least $35,000 per year, but it's very blurry. And obviously, the more the better. You will be provided by the school. Obviously, you'll ask your school. You'll tell them you need to take a private loan, and they will kind of navigate you some pages where you'll see most of the companies. There will be still probably more than that, but they will show you the main companies, and you will be able to compare the options of the loans that they offer. So when you will be doing that, the important criteria, the most important one, is interest type. So either it's fixed interest or it's variable interest. And here you need to do probably your own research. I don't have much information to tell you. Fixed, it's all I understand. Fixed means it's not gonna change. It will stay the same during all your repayment period. The variable rate, so obviously it's can fluctuate depending on the financial situation in the country. I'm not sure, but it can fluctuate. It can go up or down. And if you're good in that, I mean, like if you this, like you have this account in mind, it might be a good option for you if you understand that. And if you're not like a risky person, probably good for you to go with a fixed rate. So anyway, do your own research about that, but this is important. You may kind of gain some money with this variable interest, but you may also lose. You never know. So there are other factors which are not that important, but they still play kind of a role. And there are like tons of them. You will see them in the comparison list. I'm gonna mention some of them. It is repayment time. It's not very significant, but some loans offer you just one repayment option, like over, for example, like 20 years for graduate loan. And some loan companies offer you like options like 5, 10, or whatever, 12 or 15 years repayments options. And the other thing, I think most of them at this point, I'm not sure about, I don't want to talk about all of them, but I think most of them offer to you like 0.25% if you do auto payment, if you're enrolled on auto payment of your loan. This is kind of a benefit, but I think it's almost every company has this benefit. And some of them, like I think Discover, they have cashback, and but it's very small. You need to read, like, I'm not gonna kind of confuse you with numbers. And some of them like have such options as death forbiddance. So for example, if you, I mean, I know it's hard to imagine, but if you die, if a person dies, then this debt won't go like after, they won't go after your like estates. GPA benefits some options, but it's very small, but it's still a benefit. You might get like better, I don't know, like some cashback or something about this GPA if it's above 3 or something like that during when you're in school. So you need to read this very carefully. Some companies offer you that you can skip one payment a month, something like that. That can be also a benefit. And the one that is kind of, I feel, important is customer service. Some companies have a lot of people who took loan and they have probably not that great customer service. And some companies are smaller and they have great customer service. So this is a factor, like a criteria as well. So once you went through this comparison list and you chose, I don't know, like 4 or maybe less, like 3 or 2 options that you think you will be qualified and you like this type of the offer, like from the company, you still don't know what the interest will be. You won't know that till you apply, but you kind of look through there what they're offering in details. Once you made this kind of choice, you can apply. They will reply you pretty quick. It will be like in I don't know, maybe 15 minutes it takes them, and they will come up with the offer. They will tell you what exact interest rate they're offering to you, and then if it depends if there is like only one repayment period, like 20 years, or if you can choose like repayment time, and then the interest can fluctuate from that. So they will make you an offer. And a question that, like the most common question that it was bothering me too, was what is a good interest rate for the private loan? What is a good offer? What is considered a good offer, right? Because you don't know, it's hard to know. You can Google that, but it's still. So there is no definite answer. No, like, it depends if what type of the interest, variable or fixed, and many other factors. However, obviously the lower the interest, the better. And they will show you, like in the beginning, when you will be comparing, you will know what is their lowest, what is their highest. So you already kind of can think what is low and high for this company. But besides that, I'm gonna tell you my recommendation, but again, it's easy to say and it's hard to find and to get this interest. I would not take anything 10% or above. I mean, I know it's very easy to say don't take any loan with interest 10 or above, but you have no choice. I don't know, I'm just saying that. Sorry guys, I've been there too, so I know how you feel. And I also would have said try to find a consignor when you can get the interest at least like less 7% or less. This will be fine, I would say. Obviously, the lesser, the better. You know, if you can find a consignor with like a small possible interest, you'll be great, and I'll be very happy for you. But at least 7% or less is fine. Last but not least, the important thing with these loans, you need kind of to be calm and no hurry, and if you have obviously time, and thoroughly read everything during your application process and when you're doing the research. I know it's extremely boring, it's like, I don't know, irritating, but you have to read it, and you are smart, you're a dentist, you can figure this out, because this decision will affect like your financial situation for a long time in your future. So read this, and the other thing I wanted to tell you, that they usually, once you applied and you got an offer, and maybe you applied to multiple, like 2 or 3 companies to see which offer is the best, you don't have to make a decision right away. If you're reading carefully, that's why I'm telling you, read. You don't have to sign the contract right away. Like, you know, you accept the offer only when you sign the contract. Before you sign the contract, you're good to compare and choose. And most of the companies, they give you from 2 weeks to even a month, some of them, you know, for the offer to be valid, for the same interest that they offered. And the interesting situation happened to me. I'll tell you about a little bit my situation. So once I applied, I got a couple offers, and on the next day, the offer that I didn't like, this company called me, and I know exactly, they wanted to negotiate. So expect that. If you go with this process wisely and you have a good consignor, plus you go you have good negotiation skills, the next day, or maybe like, I don't know, another day, you still have like time to make this decision if you're not in a hurry. They might call you and you might talk to them and negotiate the situation with them, you know, and it might save you some, I don't know, some percent on your interest. It might drop it down. I thought that was very cool. Anyway, thank you for watching my video. Let me know if you have any questions. Subscribe to my channel, and see you soon guys. Bye.